Welcome, dear students. This is Himanshu Pandey, Assistant Professor, School of Management, BBD University, Lucknow. In today's session, we are going to discuss about final accounts with adjustments. So, while we preparing final accounts at the end of every financial year for ascertaining the profit and loss and a financial position of our organization, so there is also some problems occurs every time that some of the expenses which are not recorded in our books that are related to the current financial years, and some of the expenses are those expenses which are not related to the current financial years. So these type of expenses are treated as adjustment expenses, and for recording of that particular expenses, uh, we have to use some adjustment entries, some adjusting entries, and these adjusting entries are recorded in our our final account twice, for one time for either for a trading and profit and loss account, and the second time in our balance sheet. So what are the adjustments and what are the entries of adjustments? Now see, all such transactions which are related to the current financial year, but they are not included in trial balance because there was no record for them in the books of accounts as treated as adjustment. See, some of the transactions which are related to the current financial years, but these transactions are not recorded in our books for any reason. So these transactions should be recorded at the end of the financial year, because all the transactions that occurred in that particular financial years should be recorded in the same financial year. That should not be carried forward. Okay, so these are the and these are the transactions which are recorded in that particular financial year is treated as adjustments, and these are recorded as adjustment. Such transactions are also adjustments which have been recorded and appear in trial balance but not belonging to the current financial year. So there are some transactions also which are not belonging to the current financial year, but that transactions are occurred in that particular financial year, the current financial year. So these these transactions are also shows as adjustment while preparing the final accounts. So what are the objectives of preparing the adjusting entries? So we can classify it into main objects and other object. There are two classification: main objects and other objects. Now see, what are the main objects of preparing adjustment entries, and what are the other objects for preparing adjustment entries? So see, the main objects: all expenses related to current concerned financial year are recorded whether payment for them is made or not. The adjustment, all the expenses related to the current financial year, whether the payment are made or not made, but the expenses realized, that should be recorded in the same financial year. That is a concept of realization concept of accounting follows that particular rule. So like that, if you have some outstanding expenses, you have some expenses which are made in, which will be made in this particular financial year, but you are not able to pay that expenses in that particular financial year. You have to pay in the next financial year, but you have to write that expenses in the same year. Like if you have some employees, if you have any business and you have some employees, you pay salary to them, but by some reasons, if you are not able to pay the salary of April, sorry, March, February and March, so you have to pay that particular salary February and March in April, and financial year that follows from 1st April to 31st March, and you suppose that you close your accounts on 31st March, but you have to show that expenses, that salary expenses which will occur in April, you have to show in current financial year, because these are the expenses of current financial year, and you show as outstanding expenses, outstanding salary. आप उसे एक्सपेंस आप अगले ईयर में करेंगे, रियली जो आप सैलरी पे करेंगे वो अप्रैल में पे करें या मई में पे करें, जो भी पे करेंगे आप नेक्स्ट फाइनेंशियल ईयर में पे करेंगे, बट वो सैलरी है कब की, वो सैलरी इस पर्टिकुलर फाइनेंशियल ईयर की है, वो फरवरी की या मार्च की सैलरी जो भी है वो इस पर्टिकुलर फाइनेंशियल ईयर की है, तो आपको इसी पर्टिकुलर फाइनेंशियल ईयर में उसको सैलरी एक्सपेंसेस के साथ में दिखाना होगा। तो जब आप शो करेंगे प्रॉफिट एंड लॉस अकाउंट में सैलरी, so you have to show salary xyz sum of the amount and add outstanding salary xyz sum of the amount, and total salary will appear in profit and loss account, that called net salary. Okay, so this is called the first object of preparing adjustment entries. Such expenditures which are not related to the current year should not recorded, and if they have been recorded, adjusting entries should be made for them. Likewise, some expenses which are not related to the current financial year, which are for next financial year, and you occurred that particular expenses in current financial year, like you pay salary some of the persons in advance, नेक्स्ट फाइनेंशियल ईयर में जो भी अप्रैल की जो सैलरी है उसने आपने पहले दे दी, तो दैट विल कॉल एज प्रीपेड एक्सपेंसेस, and prepaid expenses are also treated as adjustment entries. You have to show salary in profit and loss account. First of all, you show salary some amount, and a prepaid expense has been less from the salary, because this salary is not related to current financial year, this is related to the next financial year, and you have to less that salary from total salary, less that salary as the name of prepaid salary, and net salary will show in the profit and loss account. You have to show all these adjustments twice in financial statement. While preparing financial statements, you have to show all these expenses, outstanding expenses, prepaid expenses, all type of adjustment expenses or incomes twice in your final accounts. First, you show at the debit or credit side of trading and profit and loss account. Next, you have to show at the liability side or at the asset side of balance sheet. So if there is outstanding expenses, you have to show at the profit and loss or trading account with the concerned expense, with adding in that particular concerned expense. And after that, you have to show that outstanding or prepaid expenses. If there is outstanding expenses, you have to show in liability side of balance sheet. If there is prepaid expenses, you have to show at the asset side of balance sheet. Okay. Next, all income related to current year should be recorded in such, if such income has not been recorded, an adjusting entry should be made. All incomes, or like all expenses, all the incomes which earned in this particular financial year, you have to record in this particular financial year. But for some reasons, if they remain to record, they are left to record, so you have to pass a adjustment entry at the end of the financial year while preparing final account for ascertaining the true profit and loss, that is called net profit or net loss, and true financial position of your business. If income of future years has been recorded, it should be corrected through accounting entries. If there are some incomes which will earn in future financial years, but that for some cause you receive that particular income in current financial year, so you also treated as these incomes are also treated as adjusting entry, and you have to make adjustment entries twice while preparing the profit and loss account. Depreciation, bad debts, bad and doubtful debts, interest on capital, interest on drawings related to current concerned financial year must be recorded so that accounting records may become true and fair. All type of depreciation, all type of bad and doubtful debts, all type of interest on capital or interest on drawing, etc., these type of expenses are also treated as adjustment entries. Like, what is depreciation? Depreciation is any expense or any fixed asset, you can say that any fixed asset, if you use some of fixed asset, there is a deterioration of price, you can say that the depreciation of price, there is a fall in the price of that particular asset by using that particular asset or passing of year. So this fall of price is treated as depreciation. Okay. Now some other objects. So other objects are to make such profit and loss so that it may indicate true and fair profit or of the concern of financial year. You have to make these adjustment entries for preparing a correct and fair financial statement, for finding the correct and fair profit or loss of your organization, to make such balance sheet so that it may indicate true and fair position of your organization. For making to make such balance sheet with the adjustment, for ascertaining the correct and fair financial position of your organization, what is the correct amount of liability you have, what is the current amount of assets you have, and what is the current amount of capital you have. Okay. So there are some adjustment entries, and what are these what are the accounting treatment of these particular adjustment entries. Now see, we have some important adjustment entries. So adjustment, and what general entry pass if we are adjusting these entries, and what is the adjustment of these entries in profit and loss account and trading account, and what is the adjustment of these entries at the time of balance sheet. So see, first of all, closing stock. Closing stock is that stock which is remain at the end of the financial year. While we preparing profit and loss account, at the end of the financial year, the stock remains is called closing stock. That closing stock have been shown in two times while preparing final accounts. First of all, we show at the credit side of trading account, and again we show it at the balance sheets asset side. So the journal entry pass for that closing stock account debit to trading account, because it affects on the trading account. So where we shows it at the credit side of trading account and at the asset side of balance sheet. Depreciation, as earlier we discussed, that what is depreciation? Depreciation is a downfall of price of fixed assets. That is called depreciation. It is a kind of loss. So the journal entry pass depreciation account debit to assets account, and we show that particular amount of depreciation at debit side of profit and loss account, and again we show it as the deducted from that particular asset on which depreciation is charged. Like depreciation on machinery, the company charges 10% depreciation on machinery. So how you show that particular depreciation? You have to charge 10% of machinery. Likewise, the price of machinery is 5,000. You have to charge 10% depreciation for the financial year. So 5,000 10% is 500. You show that particular 500 at the debit side of profit and loss account by the name of to depreciation on machinery, and after that you have to less 500 from the amount of machinery at asset side of balance sheet and show the net amount of machinery, that is 5,000 minus 500, that is 4,500 net amount of machinery that shows in the asset side of balance sheet. Now see appreciation. What is appreciation? If there is an increment in the price of fixed asset, like land is a type of fixed asset which increase continuously, the depreciation is not charges on land. So what is the treatment of that particular appreciation is just opposite from depreciation. It is a kind of income. It is a kind of income, and it should be shows at in journal entry assets account debit to appreciation, and it should be posted as the profit and loss accounts credit side and show in the asset side with added of concerned asset. Okay, like if there is a land that price 1 lakh rupees and a appreciation charge for that particular land 10% in a year, so the appreciation amount will be 10% of 1 lakh, that is 10,000. That particular 10,000 shows first at the credit side of profit and loss account by appreciation of land. Okay, then you have to show at the asset side land amount 1 lakh plus 10,000, that is 10% of 1 lakh, 1 lakh 10,000 as net value of that particular asset, that is land. So this is called appreciation and treatment of appreciation. Outstanding expenses. Outstanding expenses are those expenses which are related to current financial year, but these expenses are not actually done in this financial year. It has to be done in the next financial year. So there is a adjustment entry passed for the outstanding expenses. Like expenses account debit to outstanding expenses, it is treated as in profit and loss account on or trading account on the expense where outstanding made, like wages outstanding. If there is a outstanding wages, we have not pay some wage to the laborers in this current financial year, and you have to pay in the next financial year, so you have to show wages plus outstanding wages at trading accounts debit side, and outstanding wages separately at liability side of balance sheet. Okay, this is the treatment of outstanding expenses. Now prepaid expenses. Prepaid expenses are just opposite to the outstanding expenses. Prepaid expenses are those type of expenses which are not related to current financial year, but these expenses are made in current financial year. These are the future expenses actually. So what is the journal entry passed? Prepaid expenses debit to expenses account, and these expenses are deducted from the concerned expense like prepaid salary. So where the salary shows at the debit side of profit and loss account. You have to minus prepaid salary from the total amount of salary, and the prepaid salary again shows at the asset side of balance sheet with the name of prepaid salary. Like there is a prepaid salary of rupees 500 and the total salary amount is rupees 5,000. So 5,000 plus 500, total salary is 5,500. And again we show at the asset side that particular 500 which is added as the prepaid salary in salary while showing in profit and loss account. That salary should be shown in asset side of balance sheet with the name of prepaid salary on 500 rupees. Okay, accrued income are those income which are occurred in this particular financial year, and the journal entry passed accrued income account debit to income account, and that should be added to the income on credit side of profit and loss account and shows at the asset side of balance sheet. Unearned income account debit to unearned income is journal entry for this transaction, and that should be deducted from the credit side of profit and loss account, and this should be shows at the liability side of balance sheet. Interest on capital. If there is a interest on capital, there is charges some interest on capital. So interest on capital, there is a journal entry passed named interest on capital account debit to unearned income account. Okay, interest on capital account debit to interest on capital account debit to capital account, and that should be posted at debit side of profit and loss account and added to the capital added to the capital at liability side. Okay, now interest on drawings. So drawing account debit to interest on drawing account, and it should be posted on credit side of profit and loss account and deducted from the capital at the liability side. Okay, so interest on drawing should be shows at the credit side of profit and loss account and deducted from capital at the liability side. Interest on investment, likewise investment account debit to interest on investment account, posted at the credit side of profit and loss account and added to the investment at asset side. Interest on loan, so we have to pass a journal entry that is called interest on loan account debit to loan account, and interest on loan is a kind of expense, so it is shows at the debit side of profit and loss account and added to the loan of that particular added to the loan at liability side of balance sheet. Interest on loan advance, it is a kind of income, so loan account debit to interest on loan account, and it should be posted at the credit side of profit and loss account and added to the loan at asset side. If you are giving a loan, such kind of thing to any other person, so these interest is called as an income. Bad debts is also a kind of expense. Bad debts are those debts which are not supposed to be recovered in near future, that is called bad debts. So the bad debts account debit to debtors account, it should be posted at debit side of profit and loss account and deducted from debtors at the asset side. Provision for bad debt, if we make a provision for that particular bad debts, so we have to pass a journal entry called profit and loss account debit to provision for bad debts account, and this is posted at the debit side of profit and loss account and deducted from the debtors at asset side. Provision for discount, same treatment, profit and loss account debit to provision for discount on debtors account, and it should be debited at the profit and loss account and deducted from the debtors at the asset side. Provision for discount on creditors, if there is a provision for discount on creditor, so discount on creditors account debit to profit and loss account, and it should be credit at the profit and loss account and deducted from the amount of creditors at the liability side. Okay. Any loss, any accidental loss, so loss of stock account debit to trading or purchase account, you can write it as trading account or purchase account, deducted from purchase or post at the credit side of trading account and also debit at the profit and loss account. And at the side of balance sheet there is no effect because we chose twice at the time of trading account and profit and loss account also. Loss of asset by fire, if there is a loss by fire, so loss by fire account debit to assets account, and that should be loss by fire account will be shown in the debit side of profit and loss account, and loss will be deducted from the asset at the asset side. Accidental loss, if it is insured, so इंश्योरेंस कंपनी से आपको जो भी इंश्योर्ड है अगर, तो इंश्योरेंस कंपनी अकाउंट डेबिट और लॉस बाय फायर अकाउंट डेबिट टू एसेट्स अकाउंट, and loss by fire account will be shows at the debit side of profit and loss account, and insurance company account will be shown at the asset side, and loss by fire will be deducted from asset. Now if any manager commission or standing manager commission, so it is also treated as an expense, so profit and loss account debit to a standing manager commission, and this is shows at the debit side of profit and loss account and shown in the liability side because it have to pay in near future. Goods taken by the proprietor for personal use, it is called drawing. If any proprietor taken out any goods from his own business, so this type of transaction is called drawing, and drawings account debit to purchase account, and amount of goods taken by the proprietor will be deducted from the purchase at trading account, and amount of goods taken by the proprietor will be deducted from capital also at the liability side. Goods given as charity, charity is also a type of expense, so charity account debit to purchase account because it affect on the stock, it affects on the purchase, so deducted from purchase at debit side of trading account and deducted from capital at the liability side. Okay, so these are some important adjustments, and what is the treatment of that adjustment at trading or profit and loss account, and what is the treatment of that adjustments on balance sheet. You have seen that. Now there is a question. The question is, prepare trading and profit and loss account and balance sheet on same date for the year end on March 2016 by the following trial balance. You have to prepare a profit and loss account, trading account, and a balance sheet for the year ended on 31st March 2016. So the following trial balance is given: land and building, the stock, that is called opening stock, bills receivable, bad debts, purchases, wages, salaries, carriage, cash, debtors, retail expenses, coal and gas, and bills payable, capital, sales, provision for bad debts, and creditor. So there are two balances. This is called debit balance. This is called credit balance. If you are going to prepare a final account, you have to see that all type of expenses, if there is a trial balance, so all type of expenses entered at the debit side of trial balance, and all type of incomes are entered at the credit side of trial balance, all type of assets at debit side and all type of liabilities at credit side. If you are preparing a final account with adjustment, first of all you have to read adjustment carefully, and you have to see what these adjustment has been done at the time of preparing final account. So where there are some adjustments also: write off 200 for bad debts, make a provision for 5% on debtors and 2% on discount on debtors, 200 for wages and 100 for salary are outstanding, 100 for commission is accrued, make 5% reserve on discount on creditors, and closing stock for the value of 3500. So you have to make, first of all you have to read all these adjustments carefully and think about these adjustments uh, for some time, and what is the treatment is going on these adjustments. So like write off 200 of the bad debts, so you have to minus this 200 from bad debts. If there is bad debts given in your organization, 200 plus, uh, you have to plus that particular 200. And now see what are the treatments for these assets are, these adjustments are. There is trading and profit and loss account. uh, First of all you point out where the adjustments are given. uh, you see there is an adjustment on wages, there is an adjustment on salary, there is an adjustment on debtors, there is an adjustment on creditors, there is an adjustment on commission also. So how we have to go solve these question? See, first of all there are we have to show opening stock. There is no adjustment on opening stock. We have to show opening stock 4000 rupees. Purchase, there is no purchase return, so we have to show purchase 13,000 rupees. Wages, there is an adjustment of outstanding wages 200 rupees. What we have to do? Wages 3500 plus outstanding 200, 35 plus 200, 3700. Carriage 800, coal gas 100 rupees. Sales 22,000, closing stock 3500. You have to add credit side, that is 25,500, and add debit side, and after that compare debit and credit. If there is a balance, the credit side is more than the debit side, then the balance comes as gross profit, and it is noted as gross profit CD at the debit side of trading account. You have to transfer this at credit side of profit and loss account to 3900, and all indirect expenses like salary, Sunday expenses, all these type of expenses. So salary 1070 rupees salary, and there is an outstanding salary of rupees 100. You have to add this 100 with salary, and the net salary amount is 1170 rupees. Sundry expenses 500 rupees. Bad debts, now see there is an adjustment given, write off bad debts 200. So first of all you show bad debts 250 and 200 new bad debts that given at adjustment. You have to add this. 450 is the total amount of bad debts. Now there are some provisions for bad debts. 5% provision for bad debt on debtors. So इसके लिए आप क्या करेंगे, टोटल जो डेटर्स हैं आपके पास दैट इज 3200, 200 राइट ऑफ करना है. तो सी वर्किंग नोट नंबर 1 मैंने यहाँ पे आपको दिखा भी दिया है. 1 सी प्रोविजन फॉर बैड डेब्ट्स आप कैसे निकालेंगे. 3200 टोटल डेटर्स हैं आपके पास, जिसमें से 200 का बैड डेब्ट्स आपको राइट ऑफ करना है. तो 3200 माइनस 200, सी द नेट अमाउंट इज 3000 एंड 3000 का जो 5% होगा, you have to find out 5% on 3000, that is 150 rupees. So 150 is the new provision for bad debt, that is 150. You have to add 450 plus 150, that is 600. There is another adjustment called discount on debtors. How discount on debtors find? Discount on debtors, you have to find 3000 is net debtor after deducting write off bad debts. So 3200 minus 200, 3000 is net debtor, and you have to minus 150 the provision for bad debt. 150, 3000 minus 150, that provision, that new provision, the amount will become 2850, and you have to find 2% on this 2850, that is 57 rupees. Okay, that 57 rupees is provision for discount. And in adjustment at the credit side, there trial balance at the credit side, there is a provision for bad debts old. तो जो भी नया प्रोविजन फॉर बैड डेब्ट आया उसको आपने बैड डेब्ट के नेट अमाउंट में ऐड किया और ओल्ड प्रोविजन को लेस कर दिया, तो आपका जो नेट बैड डेब्ट का अमाउंट है वो अमाउंट आपको पता चल जाएगा. दैट अमाउंट विल बी 450 rupees. So these are the all adjustments that affected at the debit side of profit and loss account. Now see the credit side of profit and loss account. By accrued commission given 100 rupees, a reserve for discount on creditors. So जो भी अमाउंट आपका क्रेडिटर्स का था उस क्रेडिटर्स के ऊपर आपने जो भी परसेंटेज दिया है 5% और 2%, ठीक है, वो परसेंटेज यहाँ पर 5% दिया है. तो 1000 के क्रेडिटर्स थे जिसके ऊपर 5% आपने निकाल दिया, दैट इज 50 रुपीज, और इसको क्रेडिट साइड में आपने प्रॉफिट एंड लॉस के शो कर दिया. टोटल विल बी 4050 and 4050 credit side compares with the debit side, and there is a net profit of rupees 1873. That net profit should be transferred to the capital, and that will be added at the capital plus net profit. Okay, so now see what is the balance sheet for this question. Now see the balance sheet. First of all, we have to show capital. The capital is 15,000 rupees. Net profit that we find out at profit and loss account, that is 1873. We have to add this capital plus net profit. If there is a drawing given in your question, so you have to minus that drawing after adding net profit and capital. That is capital plus net profit minus drawing, if drawing is given. If not given, then there is no need to show the drawings. So capital plus net profit, that is 16,873 rupees. Creditors 1000, and discount on creditors, that is 50 rupees, so 950 rupees you have to show. Bills payable 900, and the outstanding expenses, you see outstanding wages and outstanding salary you shown in trading and profit and loss account, that also again shows at the balance sheets liability side at the end. Name outstanding expenses, wages outstanding 200 and salary outstanding 100 rupees. So the total outstanding is 300. All the adjustment has been shown at twice. कोई भी एडजस्टमेंट हो आपको दो बार दिखानी है, एक बार ट्रेडिंग या प्रॉफिट एंड लॉस अकाउंट में या एक बार बैलेंस शीट में, दोनों जगह पर आपको दिखानी होगी. ओके, नाउ सी द एसेट साइड. लैंड एंड बिल्डिंग, there is no depreciation, there is no appreciation is given in your question. So land and building should be 10,600 rupees, accrued commission 100 rupees, bills receivable 1800 rupees. These all are assets, and these all are given at the debit side of trial balance. Okay, there is a as adjustment given on debtors. So what we have to do, that particular adjustments, 3200 डेटर्स का अमाउंट जो आपको दिया हुआ था, 3200 में से सबसे पहले आप जो राइट ऑफ बैड डेब्ट्स करके 200 रुपीज आपको दिए थे, यू हैव टू माइनस दैट पर्टिकुलर 200 रुपीज, नेट बैड डेब्ट विल कम 3000. आफ्टर 3000 you have to charge 150, that is 5% of 3000, that is called provision for bad debt, and you minus it from 3000. Next, 2850 is the net amount. You have to charge 2%, that is discount on debtors, that is 57 rupees, sorry, and that 57 rupees is subtracted from 2850, that is net debtor, and after that you find a net debtor amount, that is 27,093 rupees, 2793 rupees, I am very sorry. Okay, now cash, 230 cash given at the asset side of at the debit side of um, trading account, and it is treated as current asset, so you have to show at the asset side of balance sheet. And closing stock, closing stock is also we treat it as an asset, and it will show at the credit side of trading account first, and the second will show at the assets side. And after that we total both the sides, liabilities and assets, and we find a same answer, we find a same amount that comes in, that is 19,023 rupees. Okay, so asset side is also 19,023 rupees, and liability side is also 19,023 rupees. If there is a match, show so the profit and loss account, trading account, and balance sheet, like final account is our right final account. So this is all about the adjustments. You have to make practice for the these type of adjustment. You refer this these things, and keep practicing about it. uh, if you have any doubts, uh, you can contact me. And now it is all about the final account, and we will meet you in next session with some new topics, uh, some new learning. Thank you very much for seeing this video. Thank you.